I realized actually this year when Buffett's letter came out, is even Warren Buffett has only made most of his money on about 4% of the bets that he's made. It's one out of 25 bets that has moved the needle for him. And this is Warren Buffett, doesn't make mistakes and is so particular and so careful. And so investing is a kind of very unusual art where it can tolerate a very high error rate. But in order for it to work with a very high error rate, you have to have held the ones that you truly had high conviction and truly understood for a very long time. One of the extreme cases of this is Shelby Davis, the Davis dynasty. And Shelby was very early investing in international insurance companies, and he bought a zillion of them. I mean, lots and lots and lots of bets. They were not concentrated bets. A lot of them were less than 1% of the assets you were managing. Almost nothing worked. But the Davis dynasty, they ended up with a very large net worth because one worked. They were very early in AIG. And and the thing is, whether he made a great bet or a lousy bet, he just kept them all. He never sold. And so the one great bet, which was AIG, which was less than 2% of the total amount of money they had, ended up becoming 80, 90% of the fortune. It was a big fortune. And so basically this particular notion about investing, which is, anytime we look at a business, we have a view on what it would look like 5 years, 10 years, 15 years from now. And most of the time, we're going to be wrong. That's just the real candid answer on that. And sometimes you'll be right. But to actually, harness and collect the fruits of that labor, you have to have held all the wrongs and the rights for a very long time. And that's when people get into trouble because, most mutual funds, they're going in and out of stocks all the time and all of that. And the index, the index does so well because it's too dumb to know that it owns Microsoft and too dumb to sell Microsoft, too dumb to sell Google, too dumb to sell Facebook. And it just ends up in a place where, these great businesses stick in the only time the S&P throws a company out of the portfolio is when it's so long in the tooth that it's obvious. They'll never throw out a Google until Google's lost it completely.